Welcome back. Now, strong wholesale revenue growth has bolstered Dis-Chem's half-year performance. The pharmacy chain CEO Rui Morais says the consumer environment remains constrained, but the group's innovation pipeline and data-led approach has positioned it for long-term and sustainable growth. He joins us now for greater perspective of those numbers. Thank you so much for your time, Rui. Now, from revenue right down to the bottom line, just characterize the level of growth that Dis-Chem saw in this reporting period.
Sure. So I think our results are really a two-sided story. So I think if you think about what we did in core retail, we had a very successful core retail performance. I mean, that is the engine of our business. And we saw very good revenue growth. We saw total income growing ahead of revenue and certainly growing ahead of cost growth. And as a function of that, we saw positive operating leverage resulting in 25% earnings growth in core retail. Alongside that, we invested into the income statement for the longer term play around our infrastructure, really around our innovation hub and our Dis-Chem Life business, which gives us a hold on the way that we think about health funding. And the return associated with those parts of the business much longer term and really there to protect the defensive nature of the brand within the healthcare delivery environment. On the back of that, all other metrics looked solid. We still see, as you said, a very constrained consumer. And we're really, really excited about the launch of our new rewards program. You know, it's designed in a way to put a lot of value back into the pockets of South African consumers and in turn, you know, consequently drive the loyalty that will ultimately drive the top line.
Yeah, well, actually, I wanted to dig deeper into that, this new loyalty program, Better Rewards. How's it different from the one that is already in existence? And is that really part of your broader margin management effort?
Sure. So, I mean, I can try and unpack the principles of the program. So the old program gave you 1.5% back in points across the entirety of the store. I think the new program intends to do something very different. It looked at South Africa's most commoditized lines or most shop brands. So really the things that were put into consumers' baskets month after month, every weekend, every promotion. And it says, how do we create a differential in price points always on those brands? So not switching out the brand, just ensuring that people know that if they're buying household or if they're buying face care and it's a specific brand that most South Africans shop, how do we give them the credibility that it's the lowest price points in South African retail? And the concept of Better Rewards was born, which is a base discount on top of promotions of an additional 10%. And then there's specific call to actions that bolster that 10%. So if you shop in our pharmacy, you get another 5% on the basket of front shop products. If you pay with your Capitec card, you get another 5%. So for all intents and purposes, with simple call to actions that every South Africa can do and does already, you could get 20% off on top of your promoted price at point of sale as a discount, immediately unlocking value in your wallet.
So,
and that sits at the center of our ecosystem in the way that we think about creating value.
Yeah, would you say that this then balances out helping a constrained consumer, but also protecting your own profits in terms of volumes as well?
Yeah, I mean, obviously the decisions we make, they need to do good for stakeholders and do good for customers. So this concept of doing good and doing well, you know, we wouldn't have invested blindly in this program without thinking that it's going to differentiate our ability to compete. But at the same time, I mean, it's an ecosystem and it's funding pockets within an ecosystem that we've developed over the last 5 years. So we think that the way that the program is structured and the ability for us to sustain the program is in a way giving us the ability to pass on meaningful and sustainable value back to consumers and reward them for their loyalty to our brand and to the ecosystem that we're building.
All right. And there's really a strong need for technology-based interaction from the consumer side as people seek faster and more efficient service from retailers and healthcare providers. How much room for technology investment has Dis-Chem made?
So, I mean, we continue to think that it's a super important part of our investment thesis. Like, if you just think about how healthcare is delivered in South Africa, it hasn't really been digitized. You know, the way that healthcare was delivered 20 years ago is, for all intents and purposes, the same way that healthcare is delivered today. And if you are able to digitize healthcare, if you're able to deliver it differently, you are able to reduce the cost of healthcare, which is fundamentally important to South Africans and certainly, what lives at the heart of our brand. So we will continue to invest in technologies. Our innovation hub, for example, was purposely designed to do exactly that, to use a combination of first principles or back to first principles process thinking and technology to drive lower cost and higher access to healthcare.
Yeah. And also talking about investment, I mean, what are your priorities in store expansion, and are there specific areas that you will be putting more energy and capital into?
Store expansion and kind of network size is probably the most important strategic driver for us. I mean, we exist and we have a mission of being, South Africa's healthcare authority. And to be a healthcare authority, to be any authority, you have to compete at scale. And with that, you have to invest in your network. So, investing in spaces and number of stores is important for us. We are underrepresented in provinces outside of Gauteng. And as we lay out space, certainly the next 144,000 square meters, which is the pipeline that we were chasing when we launched this property strategy, it will certainly be over-indexed to spaces outside of Gauteng. So the Western Cape, KZN, the Eastern Cape, and etc.
And just lastly, as we wrap up the conversation, Roy, just looking at your outlook going forward in the short to medium term, particularly what we can expect in the second half of this year, what will be the major focuses for Dis-Chem, of course, while still navigating the constrained consumer environment?
I think for us it will be to do more of the same. I mean, to continue the rollout of our stores, which, as I said, is fundamentally important to us. The evolution and kind of the bedding down of our reward program, I've said we think it is really differentiated. It really returns a lot of value to South African consumers. And as we think about the reward program, how do we enhance that reward program to drive the specific call to actions, so for people to use our pharmacies for preventative healthcare, to bring us our chronic scripts, which for all intents and purposes allow us as a brand to make South Africa healthier. And that really is the focus area for the next 6 months and longer term.
All right. Well, thank you so much for your time. We do have to end the conversation there. That was Rui Morais, CEO of Dis-Chem.